has a moment, so you give a little bit of an introduction of yourselves, just like what you do, what your background is, even if it's not within the cannabis space, but your expertise on this panel.
Good evening. My name is Valeska Rodriguez-Ferreira. I'm a cannabis account manager for NYC Business Solutions. We support SBS, or the Department of Cannabis NYC. We support them looking for or offering our services, guidance, getting limited resources due to the federal illegality of it. And yeah, I cover Washington Heights, but our office also covers Upper Manhattan, so we work from 42nd Street till Inwood. Thank you.
Good evening, everyone. I'm Judith Dyer. I am a Dope CFO certified advisor. I am the New York franchise owner. We service the cannabis industry, providing the industry with accounting, tax, and CFO support. I'm a 20+ year CPA. I don't want to age myself. I came from public, and I spent most of my career in the private sector, and I've been in the cannabis industry owning the franchise for almost a year now. So I'm happy to be here.
Hi, Stephen Koningsberg. I am a transactional lawyer, but I also help companies raise money. My background is mostly in emerging markets. I worked in emerging markets for over 20 years in Russia. You know, the top of the table now. They're all in the news. So that experience, with that very, very deep emerging market experience, I decided to get involved in cannabis in about 2015. So I've been in the business for about 9 years. I was general counsel of a group called Tikkun Olam, which originally came from Israel, and we'll talk about that later. But I generally advise on different transactions and all that.
All right. So the first question I want to ask, I'm going to direct to you, Valeska. Can you break down some of the different funding options that are available to cannabis entrepreneurs? A lot of people know about the difference between debt and equity, but could you break down a bit further, more of safe notes, what convertible notes, how it presents within the cannabis space, and what seems to be more commonly available within cannabis?
Yes. Well, I don't have it all.
Okay, no.
I'm just going to read some, but yes. The most common, obviously, it is the debt funding. Asset regular market, that one is, they offer that as well, but obviously it has a lot of requirements. The tax rates are super extremely high, and they don't offer most of the funding. So will be the financing, it is loans and credits, and then it will be private loans and alternative lenders. Oh, sorry. Revenue-based financing, where they put some, or they just want the revenue as a part of the loan, so they give you a loan, and then in return, they're going to take up some of your revenue. And then it will be the equipment financing when you get the loan to acquire equipment, and then after that, that will be your collateral or your new assets. Then we have the equity financing, that it will be selling ownership. Obviously, it's very common, especially in New York at this times, due to the fact that those licenses are very tricky. And if you're a car licensee and haven't opened or on those times, you have limited amount, maybe till September, to finally open. Yeah, at the end of September. I don't know exactly the date.
It depends on when you received it. So.
Correct, yeah.
Yeah.
But you have 6 months from when you receive the professional one. So, right?
I know that they made a extension recently. I think it's their final 6
Oh yeah,
month
that's
extension.
true. That is true, because it's Year 4, so
Yeah,
they were
they had an
like,
extension before, now that they had the second extension, I think this is the final one. So
Correct.
depending on when you got your license, your deadline for becoming operational is coming up.
correct.
Yeah.
So these kind of optional financing, if you will going to part ownership of your business. And this is why it's important if you open a business or are a licensing here in New York to define who are your TPIs, your true party of interest. Because these kind of financing are the one who's gonna come and get all those percentages because they give you a little bit of money in a split second. If you don't define who are they. So it's important to have that, and this kind of financing is regarding the equity of the business, or selling the ownership. And then one of those are the angels investors. They're everywhere because they do want to invest at the beginning of the business, especially when you're not even open, and then after that, they will get equity or ownership for your business because they invest the beginning or the beginning stage of when you start your business, and then are the venture capitals or private equity. They also will go for ownership or a mix of the two, and then it will be also a strategic partnerships. And then the convertible notes, that is kind of hybrid. It's a mix of two. The two getting a loan, and then correct. It is debt and equity. Again, I have heard like in my ear.
No worries, I'm gonna get to you next, no worries, you come to me next.
Yeah, and then these are no very common in this market.
The convertible notes.
Yeah, I haven't seen a lot of it, but and I don't think the market that we have right now are open to that because they're either wants to give a little bit of ownership but take everything else. If they don't want, if they want a loan, they want a loan with that it makes sense for them.
Yeah.
No, I think the market is a little bit educated on that, and it's very resilient to the fact that I want my business, cannabis business, is going to be 100% mine if I could, and that they hopefully in this market, as the adult use or the recreational license and all that, they put that TPI as a way to avoid getting full ownership from others. And then we have the SAFE or the, I always forget the kind of it, and a simple agreement for future equity. So pretty much just get a flexible agreement where the investor give money now in exchange for future shares. These ones you don't have any interest rate, and there is not a time frame on it. So I don't think also because of what I have known on the market, it's not as popular. That's what I feel. And then other ways of getting funds here will be grants. They're very, very limited, but they are in the making. As I know that the market here in New York is willing to give other opportunities and get free money, but I feel like the New York market is very new. We only on year 4, about to be year 4, and there's a lot of that we have overcome in these 4 years, almost 4 years. So I think grants and most of the things that other markets get, we can get it as well. It's going to take a minute, especially with the new administrations, but we're going to get there. Correct, eventually. And also funding. It's another way that you can get sources. There is Fund Canna that is pretty good on helping you set that up. Also, they help you with venture capitals and other goals that you might have.
Yeah. All right. So touching a bit on a little bit of what you said with equity being one of the areas in which entrepreneurs can seek out capital, where they're basically giving out a portion of their business to an investor, ownership of their business to the investor, who will in exchange give an amount of capital that they deem equal to the equity that they're giving up. So for Judith, I want to ask, how should entrepreneurs be determining a realistic valuation for their businesses, and what factors should they consider when deciding how much equity they should be giving up for how much capital they want to receive? Okay.
So to determine the value of your business, being that most of you guys are probably in the startup phase, you don't have any existing data to go off of. So you need to get a firm understanding of what your business model is, which part of the industry you're going to operate in, and understand the metrics that you're going to use to measure that sector of the business. So like if you're a cultivator, you want to know like your gross yield, like how much are you going to expect to produce every year, and then you're going to start with that, and then that's what you will use to determine how much you're going to sell. You're going to look at your market to determine the growing market, to then quantify that and put it into the your revenue that you'll generate for the year. If you're in retail, you want to think about the mix of products you're going to sell. You want to know the market the region that you're operating in, what is popular, what's selling. Is it pre-rolls? Is it flour? Is it drinks? You need to stay up to date with what the consumers are wanting, so that way you can make sure that you're stocked and you have relationships with the providers that's going to provide you with it. So you want to understand your market, and then once you start to get an understanding of that, you want to start thinking of your different revenue streams. How are you going to make money, and then you're going to use that to start to build out your model. You want to build a 5-year projection. Some start with 3, but at least a 3 to 5 years out going forward. You want to work with someone who knows what they're doing, because it's not just about, oh, I'm going to make this and I'm going to sell this and this is what I'm going to get. You have to start to look at the different risks in the market. Cannabis is a ever-changing environment right now, and so you have to prepare for tomorrow, factor in those risks into your models. You want to get a firm understanding of the costs associated with running the business. And once you're able to pull together your model, then you want to discount it backwards, right? That's one of the ways that you can do it. Because there's not that much public data, like public cannabis companies where you can look to the market, like look to the, when you're a public company, you have to release your financials. You can't really use that, so you kind of go off of the industry, whatever is being put out there. So you need to do the research or hire someone that's able to do the research for you, and then help you to come up with a nice, appropriate discount rate. And I don't know if you guys are familiar with the discount to present. You basically go backwards to what your present value is, and then you'll get a multiplier. And then this will be like what your value is. So basically, it's a lot of complex calculations, but you want to come up with a value that is realistic, and then this is which is going to be your base point for how you're going to get your capital. I'm trying to think if I left anything out, because I'm kind of scattered.
It's all right, I'll circle back.
And then, wait, hold on, then you asked about equity, like how
much
should you be
asking for, yeah.
So, and thinking of that, you want to look at the risks that, from an investor standpoint, how are they looking at their investment on their end, right? Everyone thinks that they have the best weed. So you want to know what is your differentiator, what is your competitive advantage, right? You can't just say, oh, I grow the best weed, because everyone thinks that they grow the best weed, right? So you want to have things like, if you're a dispensary, like I have a prime real estate location, right? I know I'm going to have the foot traffic because I'm in a place where everyone gets off the train and everyone's going to pass by here on their way home and they're going to be able to get the weed, right? So what is making you attractive to the investor? You want to consider control versus capital, right? How much control are you willing to give up, and how much money before you think of control versus capital, you want to think of how much money do you need to actually get up and running. And then you want to think about, do you need all of this money right now, right? Because you might be able to get a lot of capital right now, but then what about tomorrow? How much are you giving up? What about growth and expansion? You want to be able to keep some of that equity so that you can still have control going forward. And also, if you're able to prove that you're able to get up and running and profitable, then it allows for your model to now be more attractive going forward. So don't go in and try to get that $20 million, right? Like, it's like, okay, if you're opening up a dispensary, you might have this dream dispensary in mind of what you want it to look like, but do you really need all of the bells and whistles right now, or do you just need product on the shelves to get it running so you can start generating, right? So that's one of the things that you want to consider. When thinking about a large investment versus a bunch of smaller investments, I think when you put a lot of control in one person's hands, right? Like they might have a lot of demands or a lot of returns or high returns that may not allow you to retain what you need to grow to the level that you want. But when you have many investors, it's a lot of people that you need to satisfy, right? So there's the pros and cons that way. And then also, when you get a large investment, you have a lot more capital, so you have a lot more cushion, right? So you're able to operate a little bit longer. Your cash flows is there versus getting the small rounds and keep on going. It's like sometimes you always have to think about tomorrow. So if you are going to do it that way, you want to make sure that you are doing a rolling cash forecast and paying attention to when the money is coming in versus when the money is going out. And if your cash burn is high and you're spending more than you're coming in, you want to identify those deficits and plan for how you're going to fund those deficits before it happens. Did I answer the question?
You did.
Okay.
Sorry. All right, that's great. And I know you did touch on one thing, and I kind of want to circle back onto it, which was that there isn't a lot of data around businesses. So as new startups, you don't have a lot to draw from when you're trying to make your projections. Mm-hmm. So finding a reliable source where you can get accurate, up-to-date information on the market, because you're not getting information on specific companies, because there aren't really public companies specific to like New York or something like that. One thing I always tell people is that if you watch the OCM's monthly meetings, at the end of every meeting, they give data, up-to-date data on the market as a whole. Mm-hmm. So if you're trying to decide like what's happening within the market, if you need to pivot your business into a new direction, if you feel like this particular area, if you're making edibles and you recognize that, oh, flower is not doing as well as it used to, or edibles are doing better, or vapes are doing better, trying to make those decisions on what direction your business should be going in, you should definitely be paying attention to those OCM meetings in general, but specifically that tail end, because they give you a ton of data every single month on what happens, and they keep it up to date for each month. So definitely keep up to date with that. All right, next I have a question for Stephen. Wait, actually no, before we get to Stephen, I just have one more for Valeska, which is how much does an entrepreneur's personal finances impact their ability to secure funding, whether it be from debt or from equity, either way? And how can they prepare financially, personally, prior to approaching potential investors in their business?
Yes, super important that before setting up and trying to open any business, you need to make sure that all your financials are in order. You have to have the entrepreneur mentality. You need to make sure that your credit is in place, that you have no debt or minimum. Or if you have debt, that you pay on time and don't have anything carry you over, because you want a business to prosper. You wanna invest in a business because you wanna something better for yourself. So those are keys. Yes, it's necessary to get into that big money or private investors or regular investors or anything. You need to think about opening a business, and it's not a cannabis business. You need to set up your mind and your goals as I'm gonna open a business, I need to get this straight up, that other thing, I'm gonna make sacrifices, or I'm going to fundraise, like things that are baby steps or to get aligned into, I'm going to get the 100,000 at the beginning, the 150, the 25, because you just want to start. So that are keys, are necessary tools that you need, that it will make you totally the full package to present this your business plan, your pitch to anyone that you think it will be a good potential investor, or for your grants when you they're gonna happen, and I'm just
I think I'm
like just doing it for the government, of course, but or for the city. There you need to present the same things. You have to have a pitch. Your things have to be in order. Your financials, your projects, those baby steps that you need. It's important that you're ready for the private investors to see you as a entrepreneur. You're already there. You're financial ready. You have a team. You have what eventually projecting your business. That as Stacy said, if you don't have a data, you don't have a reference, the OCM gives you this, even in writing. It's very robust when they send all those meetings in writing, but you do have it. So be prepared, be there. I brought tonight, my colleague, Maria Cabrera. She, it's one of our financial account managers, I don't know what I'm saying now. Just a financial advisor, that was like, account manager, and she, they do, we offer a lot of remedies and a lot of resources for small business, especially we give small business services to all of you that wanted to open their business or start an idea. And one of the resources that we give, it is credit counseling, and it's absolutely free. It is an hour of their time. They call you, they go around how to fix your credit. And I think it takes, how long does it take, Maria? Or you wanna, I'll give you the microphone. How are you gonna do?
Real quick, yes. Sure. Thank you. Thank you for having us. We have partners. My name is Maria Cabrera, Senior Finance and Account Manager in Washington Heights location. We cover from 42nd Street to 215, English and Spanish. And in Spanish, mostly from 155th to 215. So I put there one sign-in sheet. If you want to continue having conversation about your options in terms of financing or the credit counseling, we can schedule an appointment over the phone with one of our partners that can help you. We cannot tell you like it's gonna take 1 month, 2 months, because that will depend on what is the situation of the credit. And the counselor will work with you until you be ready. So we can continue getting those fundings through the resources that we have, but still we will continue working with you in other areas, in other steps while you fix your credit. But it's very important that we take action before to be a formal entrepreneur.
Thank you.
Yeah, so actually I will attest to that because I know just in general, even outside of the services they provide, New York City actually does provide a ton of free services to entrepreneurs that are looking to get themselves set up. I know I'm not sure if it was SBS or if it was the Resource Center, but they provide free legal advice regarding like setting up formation of your business. They provide free financial advice as far as like getting your credit in order, because like she mentioned,
Training.
when you're seeking capital and investors, they want to know that they're putting their capital in the hands of an entrepreneur that's not going to waste it, that's not going to get them into debt and then give them no return on their investment. So you want to make sure that you personally, as the entrepreneur that they're investing in, is presented as strongly financially as possible. So you want to make sure that you have a good, strong credit score so that they see that you have a good track record of making sure that you pay your bills on time and that you're not just going to end up in debt and lose all of their money. So definitely a good resource, and there is a sign-up sheet if you want to be able to set up an appointment because they are offering that service for free. Yeah, they have plenty of information as well as your business card too. Perfect. All right, let's turn to Steven. All right, as our resident attorney on the Hill, I'm going to ask you how the current cannabis regulations, as convoluted as it may seem at times, how those regulations impact fundraising currently. I know there's a lot of talk about whether New York is investable or uninvestable, because I've heard both arguments before, but how can, so what strategies can entrepreneurs use to work towards navigating those investment industry challenges? Thank you.
So first of all, I should say that more than anything, cannabis is hard. It's not easy. If you're getting into this business, like many people did when I got into the business about 2016, there was this, I don't know, irrational exuberance as to where they thought cannabis would be in 2, 3, 4, 5 years' time. When it comes to specific regulations in New York, I can't speak to the specific regulations, but what I can say is that most likely if you're raising money, you're going to have to pay attention to the securities laws. And in accordance with federal law, you're not allowed to issue any equity or any debt unless you are registered. This is with respect especially to equity. So what you're going to need to do is find yourself a safe harbor in order to be able to raise that money. So as an example, usually with entrepreneurs, you're looking for people that, as all these people were saying here, that can trust you. You are your brand, you are your business, you are your product. So what you should be focusing on initially, and this is what most entrepreneurs do, most startups do, is focus on their friends and family. This tends to be a starting point simply because you have people that already trust you out there, that are willing to gamble on you, willing to bet on you. Next stage becomes a little bit more difficult, but for the friends and family, you can be somewhat flexible in what you're going to be doing and use them as a stepping stone, use them as a sounding board, right? This is your chance to get your finances in order, to understand what else is out there. As Stacey had mentioned, there aren't many comparables around, but they're out there if you start searching around. You'll be able to use a CFO and get your act in order. In order to be able to do that, I would recommend you hiring an attorney, not necessarily me, because I'm very expensive. But hardly joking. But at the same time, you need to have somebody looking over your documentation to ensure they're in order. You're going to have a lot more flexibility early on than you are going to have at the later stages. As a cautionary tale, to give you an example, I joined my company in 2015, just after a friends and family round. I think that they valued their company at $10 million. How did they get to that $10 million? They just threw it out there and people invested. At the time, there was a lot of, again, irrational exuberance. You take what you can get. However, you have to back it up with projections and proper numbers. All the projections, just so you know, all the projections that were produced by my company at that time, none of them came true at all. Okay? You're going to be wrong. It's not whether you're wrong, it's what you can sell. And it's what you can argue, because again, you're out there selling yourself and selling your brand. So just to give you another example, the second round is when I joined, we went from a $10 million valuation to a $35 million valuation. We raised money then, ran out of money, raised money again at $80 million, right? That was maybe a year or two later. I want to say that was 2017-18. The company, which I haven't been with for over a year now, is trying to raise money now in order to keep itself alive at a $2 million valuation. So you're dealing in a business that's extremely hard. You have to have people that believe in you. You have to make sure that you check all the boxes with your CFO and with your lawyer. And you have to ensure that your message is consistent.
That is quite a drop in valuation to steadily increase to plummet back down to reality. But
Well,
that's
one thing I didn't say is all the investors that invested up and through the $80 million valuation, as a result of us defaulting effectively on the debt, all of the current investors went from owning 100% of the company to 5% of the company. They were basically crammed down, and the people that came in under a convertible note at the time, which was at a very decent rate, 6%, you're not going to probably get less than 10, 12, 15% nowadays, especially the startup. So you're probably selling equity first, right? They now own the company, and they have, to the people that are discussing here, over 150 investors, which is a nightmare when you have a $2 million.
Wow.
Anyway. This is not to put you off, this is just to put things in perspective, right? Because if you're passionate, if you're focused, if you're dedicated, you can become a success.
All right. So I know you did touch a little, Judith, I'm coming to you next. You did touch a little on the next question I had for you in your previous one, so I'm going to give you a little room to kind of like address what you feel is an area that may not be touched. But before I do that, I want to touch on something that Stephen first said about how, from your example of that one particular company, they kept raising funding, they kept raising the valuation. I don't know whether the business was succeeding and that's why the valuation kept going up. But the thing is, each round they did succeed at raising more and more capital. And I don't know whether it's from the same investors or they managed to get more investors, considering the number of investors that they ended up happening. They probably got new ones added along the way. So I feel like without knowing too much more about that scenario, I feel like that's a perfect example of clearly those entrepreneurs knew how to sell themselves as a confident investment choice. So much of getting investment, as I've been told over many years, that investors are not actually investing in the company. The investors are investing in the founders, in the CEOs, in the entrepreneurs behind the company. You really have to sell that you know what you're doing, that you're capable, and that you have something that no one else has. So you really have to not so much copy what you see as success, but more so be unique in what makes me different and why is it that I'm a great investment option. All right, so I do want to get back to Judith. I know you touched on it a little bit, but you can get back to it if you want, which would be the difference between getting multiple smaller investments versus getting like one large investment where you only have to work with one person. So in that particular example that Stephen gave, they ended up with over 100 investors, which is like, now you have to manage a relationship with over 100 people that want to know what you're doing with their money. That sounds like an entire job all on its own. But you could end up raising more money if you have more people. What are the benefits and cons that go with each of those two different options of having multiple smaller investors versus one larger investor?
Before I go there, investing in the founders, one of the key things you also want to do, just to say, is like building up your team around you, right? So, an investor is more likely to look at someone who has a CFO on board, who has legal on board, who have compliance on board, because a lot of the CEOs, you know, like sometimes it's like, oh yeah, me and my boys gonna start up this or whatever, but you don't build up a team of experts around you, right? So when giving you this investment, they want to make sure that you have someone that's going to keep you in line, someone that's going to stay up to date with the regulations and make sure that the brand stays compliant, and also they want someone who they can trust their money with, right? Like with experience doing it, not just someone saying, I know how. So that was one of my things I wanted to say. In terms of the investors, like one investor over the many investors, like I said, it's like a capital versus control, right? Like, you know, you have one big investor, they have a lot of say on one, what they expect as a return, two, on how they want the business to run, and a lot of it they just want to focus on getting, like, maximizing their return on their investment, right? So their vision might not align with your vision because they're all about the bottom line. When you have multiple investors now, you know, like I said, especially if, you know, you bring them on gradually, sometimes you might want to even, you know, you want to give some equity to your employees, right? Like, so that, like, employees that are vested in the business, they work better, just because the better the business does, the better they perform, the more money they get out of it. In that regard, I think that you are allowed, no one person has that much control or that much say over what happens, and a bunch of 1% ownerships versus you maintaining your 60%, right? Like, you're still in command of the ship. Or what I say, I'm the captain of the ship, no? But you don't want nobody to come in there and try to take away the steering wheel from you, right? However, like I said, one big investor does give you enough capital, if they're allowed to give you enough capital. You have your capital expenditures that you, the one-time expenses that you need to get the business up and running, but then you also have your everyday expenses, right? So you want to be able to, to start the business and keep it going and pay your employees and keep the lights on, as they say. But on the other side, sometimes when you're doing the multiple rounds, of funding, the perception of it sometimes might look away, and perception goes very far. Whereas people might think that you're not doing well as a business. Why do you have to keep on raising money just to fund, right? So sometimes you can tie that to milestones, right? So when you could even do like several rounds, it might be with the same investors, right? But you take on, let's say, 100,000, I need to get my license and I need to get real estate. And then they see that you were able to do that within this time frame. And then they're gonna pour into you another XYZ. But at least you're able to show them, like, you're building up your word, right? Like, you're able to do what you say you're gonna do. And then in addition, your model changes with assumptions, right? So your assumptions change because now they look at it and they're assuming, like, oh, well, they're credible, right? Like, it's building up your credit without looking at your credit score, because your credit score is only one part of your credibility. Does that answer the question?
I think you did well, a little bit more, but
okay.
That was good.
All right, I don't want to take off.
No problem. Not Jamaican, just keeps coming out. So we do have one more question with Steven, but after that I want to open it up. So if you guys have any questions for any of the panelists here, just keep them in front of mind because we're going to get to you shortly. All right? So for Steven, I'm going to ask, beyond securing money and how much capital the investor has, what should entrepreneurs be doing to vet potential investors? Because we've talked a lot about how to make yourself and your business more attractive to investors, but now that we've gotten an investor at the table, what should we be looking at? What should we be finding, like nitpicking a little bit, kind of seeing how do we know that this is not going to be predatory, or how do we know that this is going to be successful for the business? What should they be looking at?
Yeah, first of all, I should mention, cannabis is really hard. Did I say that already?
Bears repeating.
Right, I worked, like I said, I worked in emerging markets for over 20 years in Russia, in a different language, in a different law, and cannabis is still the hardest thing I've ever done.
Wow.
So, one of the things that you need to focus, you need to align. One of the ways to do that, obviously, again, when you start in your friends and family round, these are people that are very much aligned with you. In some sense, you know, you're looking for your wise uncle that's looking to help you get it to that next level. He doesn't necessarily need to be in the business, but they might be able to help. And at every single level, you should be looking for that investor that's going to take you to the next level. Obviously, step one is getting them through the door and getting their money. However, at the same time, you're going to want to ensure that at each level you're going to bring money in, that these investors, again, are aligned with your vision, that can mentor you, that can find different deals within the state or within, bring other people in as well. Really, it is if I was to say there's one overarching view, it's definitely the mentoring view about how that person is going to work with you. For example, if you're looking at a fund, this is, again, we're a few steps down the line here, but if you're looking at a professional cannabis investors, these are people that are there to help you succeed. So over and above, the valuation, you are the brand, your numbers, your deck, everything has to be perfect. But at the same time, there are going to be people out there to help you. And that's really what you should be looking for.
Yeah, that actually kind of reminds me of the thought that when you're seeking an investor, you should first also, besides the capital, know what areas you may not be your strong suit.
Exactly.
So
right.
find areas where you may need help. Maybe you need someone who has a lot of experience within the marketing aspect, or they have a connection to a company, or they've worked with a company that can help you in areas where you're not as well versed. So that's another area where you can kind of like be vetting potential investors and finding areas where they're not only strengthening you with capital, but they're strengthening you with their skill set, with their knowledge base. All of that things is what they bring to the table. And you should never feel like, oh, I'm just here because I need capital and they have it, so I'm just going to fall in line to get it. No, you have a business that they want to be interested in as well. So you should always make sure you understand that you're bringing something to the table as well. Don't let them take advantage. Make sure that you're getting something out of it at all times as well. All right?
Again, this is your business.
Exactly.
Right? This is your business,
Yeah.
not their business. They're relying on you.
Yeah, they're not buying your
But you should
business,
also rely
they're
on them.
investing in your business.
All money isn't good money.
Exactly, it's a partnership,
Although-
that's right. All right, so I'm going to open it up. If there's like about 10 minutes, we can get some questions coming in. I see one in